Okay guys, so in today's video we're going to be talking about the IRS and exchanges stealing your data. So if you're new to the channel, welcome, please subscribe. This is actually take 2. I tried recording this earlier, didn't come out great, so hopefully this comes out perfect. The IRS is apparently going to be sending 10,000 letters to 10,000 cryptocurrency users. I presume that includes businesses as well. Now, this is nothing new. I've been hearing rumors and stories about this since 2018. Exchanges getting letters from the SEC, from the government, from the IRS, people who've made a lot of profit from crypto, like the old school the OG Bitcoin investors from 2010 and 11. Even they've been tracked down in some cases, I've been hearing. So this doesn't really come as a surprise. There'll be links below to every single thing I'm going to mention and talk about, including how on this channel back in late 2016 and 2017 we was actually discussing and debating how the taxman, how the state is going to compromise cryptocurrency users through exchanges and even through wallets. And now it's beginning to happen, right? We're seeing it happen. We're seeing it all happen. Even when we discussed Facebook, Google, YouTube building their own cryptocurrencies, well, we have Facebook coin now. So, these are real things that people don't take heed of. And now the IRS wants 10,000 people to cough up their transactional data in regards to cryptocurrencies, or as they call it, virtual currencies. The yearly bracket they're targeting is actually 2013 to 2017, which means, there's a lot of tax that's going to be owed. It's looking like there's a lot of money the taxman wants. Now, if you remember, years ago, like 2017, late 2016, Coinbase had a legal battle with the IRS. And guess how many people's data the IRS was demanding Coinbase to give over and submit? Around 13,000 people, all of which made profits above $20,000. That's about, I don't know, 14,000, 15,000 pounds, which is about right with the capital gains requirement over here, which is like 12k or something. Even though Coinbase did get a minor victory, Coinbase ultimately had to give over that data. Fast forward 2 years to now where we see cryptocurrencies begin to rise again. We're in a new tax year as well. The IRS is now sending out these letters, these warning letters. Coincidence? I'll let you decide. But so what I was trying to basically say is the data obtained that the IRS obtained from Coinbase is now being used to throw these letters out. That's my theory. I don't know if it's true or not. There's no official statement on that, but that seems to be the case. Now, interestingly, there's pictures of these letters floating around on the internet. There's actually 3 types of these letters based on how much data and the type of data they've got on you. They've given it like 3 separate codes. But the worrying thing is, guys, this doesn't come as a surprise to me or any of you guys that have been watching this channel since 2016, 2017. We're not surprised. But it goes to show exchanges are snitching and selling out people's data, guys. They're doing it a lot. See, the thing is, exchanges, in case you guys didn't realize, exchanges have data regarding, they have your IP address. With that, they can get your internet service provider. Through that, they can enforce that those companies submit your data, your name, your contact number, your email address, where you live. They got your operating system. They know what operating system you're using, whether you're using Linux or Windows. They know what browser you're using. They know everything about you. It's all on the dashboard, on the back end of these websites, of these exchanges. They've got all our data, and that data is valuable. And the taxman wants that data. Did you know there's actually news that the IRS was training its staff on how to use cryptocurrency wallets? And how to look on the blockchain, how to search and monitor transactions on the blockchain. Because the blockchain, because it's a double-edged sword, as we've been saying, can track you, right? It's great for us, we can track where a hacker has sent the money, but the IRS can also track your money. The IRS can follow all of your activity on a screen. It's cheap. You've got blockchain analytical companies now that specialize in doing just that on the Bitcoin, Ethereum, XRP, on all these ledgers. See, Bitcoin is pseudo-anonymous. All they need to do is pin your name to it, pin an account to it, pin an exchange account to it, or a bank account to it, and boom, they've got you. You can't escape that. You can use a mixer, perhaps. Nothing's ever impregnable. So we've looked at where they're getting the data from, but why now? Why are they doing this now? What's the game plan? Well, a lot of people, it's quite simple, guys. Profit, money, control. The average cryptocurrency user who bought before 2017 and held even up till today likely made at least 1,000 to 2,000%. That's pretty average for crypto. Traditionally, that's insane gains, but in crypto, that's nothing. And also, to get a better control of the digital assets, of the digital asset space, they need to pretty much carpet bomb it with rules, regulations, and basically make an example of a few people. Strike fear in the general public. And once they do that, once all resistance has been crushed, they can roll in and do as they please. And that seems like what they're doing. There seems to be a bit of friction with tech companies and financial institutions and government. They all seem to be moving out of sync, but I think that will change in time. The prelude to greater control. See, cryptocurrencies has become so big now, it's not going away, and they can't ignore it. It's too big for them to ignore. We've covered this as well in previous videos. Trump's tweet, US government addressing the world on cryptocurrencies, saying it's a national security risk. So what we're seeing is basically damage control, I think, to a certain extent. This is the government's way of co-managing the growth of cryptocurrencies. And for the taxman, for the IRS, or in the UK's case, HMRC, there's a lot of profit to be made.